Today, we will talk about 5 penny stocks with super low float that could go parabolic. In recent months, the market's appetite for penny stocks has been seriously curbed. This makes sense, given that cryptocurrencies have again become the risky plays favored by most retail speculators. Success in investing in sub-$5 stocks has become even more elusive. But that doesn't mean you should skip out on the category completely. Why? Well, while few are trading at or near all-time highs right now, there are still scores of low-price names that could see big spikes in the coming year. 1. Foresight Autonomous. As fellow Investor Place contributor Alex Sirois recently wrote, FRSX stock is a growth stock that has seen better days. The former Special Purpose Acquisition Company, SPAC, once traded for as much as $12.14, back when both SPAC and autonomous vehicle, AV, plays were popular. But now, as both trends have taken a breather, shares have tanked. The stock now changes hands for a little above $2 per share. Why buy this stock when the market has seemingly thrown it into the bargain bin? Sure, challenges in the auto industry have delayed this Israel-based name's commercialization efforts. Yet, if these issues start to clear up in 2022, and the company continues to make progress moving out of the pre-revenue stage, it's hard not to see investor confidence returning. This would enable FRSX to climb back toward its 52-week high. That said, keep in mind that it's anything but certain this one of the penny stocks comes back in a big way. Foresight Autonomous current cash position of around $49 million may be enough to keep the lights on for now. However, I wouldn't rule out the possibility that the company raises money down the road via a secondary offering. This would be dilutive and potentially limit upside. Nevertheless, with the Advanced Driver Assistance Systems, ADAS, trend set to accelerate, it can't hurt to give this currently out of favor play a closer look. 2. Global Star. I wouldn't go as far as to call it a meme stock. However, Global Star was just one of many penny stocks that made some wild moves this year thanks to speculative frenzy. Specifically, this satellite communications play has spiked, and some thanks to rumors of Apple, NASDAQ AAPL, signing on as a customer to give iPhones satellite connectivity. Unfortunately, I wouldn't bank on an Apple partnership anytime soon. The verdict on that rumor is pretty much in at this point. However, tremendous upside for GSAT stock could arise due to factors independent of any sort of possible partnership with the FAANG component. As I said back in November, Global Star could go parabolic if it manages to lock down a connectivity deal with another big-ticket end user. Given the continued high growth of the Internet of Things (IoT) industry, demand is only going to get stronger for satellite communication services. Considering how much C-band spectrum it owns, this company has the capacity to take on much more business than it generates today, around $123 million in annual sales. A quarter or two of bad results could sink shares down to sub-$1 levels. Yet, with its high leverage serving as a double-edged sword, a major deal would likely result in another round of epic moves for GSAT stock. 3. Romeo Power, an EV battery maker that also went public via the SPAC route. RMO stock has been a dud since its December 2020 DSPAC. Year-to-date, it's down more than 82%. Sell-side analysts have soured on it. Meanwhile, investors are placing their chips on other early-stage EV battery companies like QuantumScape, NYSDQS. Even so, you may want to go against the grain and make a contrarian wager on Romeo Power. Reporting higher than expected revenue and lower than expected losses last quarter, it's clear the situation here isn't as dire as the market suggests. Of course, that's not to say that Romeo has finally reached its payoff moment. Although it is focusing on a niche, providing EV batteries for trucks, competition is still fierce. Rivals like Microvast, NASDAQ, MVST have made more progress grabbing market share. Still, I wouldn't discount Romeo Power's chances. With $181 million in cash on hand and making progress building out its manufacturing, the company could continue to level up and deliver strong results. Beaten down by investor disappointment, RNO stock trades for around $4 per share today. But considering its prospects for progress, plus its potential as a short squeeze play, with 28.85% of float sold short, you may want to get into this overlooked pick of the penny stocks ahead of a possible 2022 rebound. 4. Sesen Bio. If you're looking for penny stocks with 10x potential, biotechnology is a great place to search. It's not definite that SESN stock has what it takes to rise 1,000% next year. But given the degree to which this biotech play has been beaten down this year, as well as the fact it's not game over just yet for its flagship drug candidate, a big recovery for Sesen Bio may be possible. What's the story here? Well, the stock surged earlier this year on hopes that its bladder cancer treatment could get U.S. Food and Drug Administration (FDA) approval. Unfortunately, that didn't happen. Instead, the drug was flat out rejected in August. Because of that, SESN stock collapsed in price, trading for as much as $6.04 right before the announcement. Shares fell over 50% on that day alone, and fell further the following day. By October, shares neared the 52-week low of 70 cents. That said, things are now looking brighter for this risky clinical stage company, announcing that it was having a meeting with the FDA on October 29. Hope has started to return to Sesen Bio. As such, ahead of it making more progress, you may want to buy SESN stock. However, keep in mind that it's still a very risky play. Position accordingly. 5. Sundial Growers. Next up on this list of penny stocks is Sundial Growers. Traders got ahead of themselves last winter, bidding up SNDL stock due to its appeal as a pot legalization play. Yet, this name's days of to the moon moves may not be over. The Canada-based cannabis purveyor trades for around 60 cents as of this writing. This comes after it saw a brief dead cat bounce, thanks to news about it launching a share repurchase program. This program could help counter some, but not all of the high sundial shareholder dilution seen in 2021. However, buybacks aren't going to be what potentially moves this low-priced marijuana stock higher over the next 12 months. Rather, that could occur if U.S. federal cannabis legalization finally happens next year. Although the market isn't confident in that happening, with signs it's becoming a bipartisan issue, legalization could still come about much sooner than expected. But better yet, big gains could happen even without legalization progress in the near future. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.